All right, guys, here we go. In today's video, we're going to talk about micro silver futures. And I think it's the best kept secret out there. You're able to control 1,000 ounces of silver for just over $2,000. And how I found my way into it was that I kept, being flustered by seeing the price of silver float down while holding the physical, okay? And obviously, you don't want to send the physical back and, sell it and then, try to time it and buy it again, all that hassle. You just want to, buy it and hold it. And I was talking with my brother-in-law who owns a steel company and he hedges his steel prices through the futures market. And I'm not the smartest guy in the room, but I figured out pretty quick there had to be a way I could, leverage the price of silver as it was coming down on the futures market. So that's how I came in to know, and find out about the micro futures because it's just a tenth of the price. And so you can get in at a low risk, with low risk capital, low initial investment, etc. So anyway, we were able to short it down and then with the profits buy more what physical, yeah, and we're riding it up. So let me break this chart down for you and show you where we were able to enter at and start scaling in, and then where we believe the price is headed for the next minor pullback, so to speak. Okay, let me put this chart together. And as you can see, let's start at the bottom here. We had three hits of this trend line and high odds, high probability on the third hit. You're going to, reverse and pop back up to the upside. And then we were in a what we call an inside bar. In other words, big red candle here. All the trading was inside of it, and then we broke out. Now, normally, during the classical technical analysis, you'll break out on the fifth candle. So guess what? One, two, three, four, five. Broke out, cleared that inside bar, that big red candle. See the white line there? So that was our first entry, our first scale in, and then it backfilled a little bit, and this is our second scale in uh, for silver on the futures market, looking for more upside. Okay, and currently this is where we are, and after this little pullback here, as you can see, we scaled in again. And now let's switch up a little bit and show you where we believe silver could be going. All right, as you can see, as price moves up, there's three areas, three factors that can cause price, to hit a resistance zone and possibly pull back or have to consolidate before moving up further. Okay. One of those is a higher low pivot, and a pivot is basically a 180 in the price. Okay. Like you're going out, let me see if I can draw this out. You're going up nicely, and then you pivot, pull back, price has to take a rest, and then you pivot 180 and price continues up. And you can see them all over the chart here. And it generally, starts out with a one dominant color, then switches to another, either red on the way down and then green up, or green on the way up, red down. Okay, that's one factor. Number two is a moving average. Okay, they do have an effect on the price if you're coming from the bottom and hitting that moving average, or coming from the top down into that moving average. And then the last one is our fib lines. Okay, the fib retracement line. Now, the more of those factors you had lined up in an area close together, or preferably on top, the stronger that resistance or stronger that support zone is going to be. Okay. Now, as it's a weekly chart, every candle is a weekly price action. We're just doing this to more clearly allow you to see the chart and see what's happening. Now, as we move up here, as we always look, okay, left, okay, that's going to give you the answers to where the next resistance is as you're moving up. Or if you're coming down, look left, and that'll show you where your potential support zones are. And as we look left here, we see this high pivot. Now, why is this high pivot? We believe is very valid, very reliable. Number one, We had, it was, well, number one, to start with, it was resistance. As we hit it, pulled back, came back to this area of consolidation down there, as you see. And then we came up and finally got over it. And then we actually retested it on the first candle that we closed above it, weekly candle, that is, at the end of February, and then we wicked into it. It was bought up in March, end of March, here again in April, and then we finally ran out of gas, and it closed just under it in the middle of April. And then you know the rest of the story here. Okay, so that's a valid and reliable location for resistance as we come up here, because it was resistance, then it was previous what? Support until we broke it. Okay, so it should be resistance as we come up into it. And then next, we're the 0.786 fib. Now, this is from this swing high to swing low, this complete leg here at 0.786 fib is normally pretty good resistance coming up into it, and of course, pretty good support coming down into it. Matter of fact, kind of off topic, in 2018, as Bitcoin was falling, we would place our fib lines on the chart, and it was like an ATM machine. As soon as, of course, you got to know where to put those lines. But anyway, as soon as Bitcoin, the price would hit that 0.786 fib, it would rally and do pretty well for us. So we know, you know, we can teach you how to put these lines in the chart and what to do and how to do that sort of thing. But in the meantime, we're looking for, 24.30 to, to possibly $25 where silver will be going to next. Okay. So what we could do, let me get everything off here, kind of clean this up a little bit. So we have this little push high. As we come up into that zone, we could make this was our last pivot here. Okay, as we came down here, pivot, come up, pivot, and then go. Let me show you what I'm talking about. So either the red dash line or that 0.786, we could pull back, make a higher low, okay, low, higher low. And coming back in is okay. I mean, remember when your kids were jumping on the trampoline, the only way to go higher was to come back and slam that tramp and continue, to the upside. So yeah, making these W patterns, that's a secret. That's what you want going up. And what you don't want, unless you're short, going short, are the M formations, okay? Where you have a high, you come back in as a rest, you run back up, but you can't make a higher high. You make a lower high, and then what triggers it is when you take out that low pivot there to the downside. But okay, guys, I appreciate you watching the video. If you'd like to know more about micro futures, the Economic Ninja and I have a introduction to micro futures course. About half of it is the introduction to micro futures and what that's all involved with. And then more than half of it is the trading side, how to scale in, how to scale out. Everything showing you here is just like a thimbleful. It's nothing compared to obviously what the course is. So appreciate you checking that out. And then in the meantime, give us a follow on Twitter, and we will see you on the charts.